the reason the Fed hasn't cut rates where the Australians have and the Europeans have and the UK has is that those economies are weak. As we've been describing, the US economy still looks pretty strong. And GDP growth in Q2, driven by AI, but was 2% or so. So, we have a strong economy. There's no need to slash rates. And of course, the president is not asking the Fed to cut rates 50, 75 basis points. He wants them to cut rates by 3 percentage points. Well, that's totally unjustified. And then when you think about tariffs, I mean, it is helping to address the problem that Rick Santelli mentioned, which is that you have a very large fiscal deficit. In practice, what has happened this year is you've had a massive tax increase in the US. Tariffs are essentially paid by consumers. They're paid by low-end consumers who are buying cheap products imported from China. And that's why the fiscal deficit's actually shrinking at the moment, but that is not good for the economy. It means that, you talked about it earlier when you went through the CPI data, that actually demand is weakening. Real consumption today is where it was at the beginning of the end of last year. It hasn't grown at all because the cost of imported manufactured goods, fabric, apparel, electronics, etc., has actually been rising because of the tariffs. So, that's not a situation in which the economy is going to grow fast. So eventually, the Fed will cut rates, but it's certainly not going to slash them at the rate that the president would like.
Garry, the point I want to push you on is, do you believe that one of the main reasons President Trump wants rates as low as, let's say, 1%, as you pointed out, is simply to lower the cost of servicing the debt and the deficit, which continues to grow?
Yeah, I mean, again, I don't think he thinks about it in quite such sophisticated terms. His background is as a real estate developer. He likes to borrow cheaply. He knows that when you allow people to borrow cheaply, that's good. So I do think an issue is going to be how much pressure does the White House put on the Fed? We're going to see probably in the next month or two who will be his nominee for the next Fed chair. If the nominee for the director of the Bureau of Labor Statistics is anything to go by, he's going to choose someone very loyal to him, very partisan, who maybe will ignore any economic logic and go out and cut rates. And there's history here. This is what happened in the 1970s, and we know what happened after that. The market, I think, when it does wake up, if that is what the president tries to do, and we start to see, for example, the payroll monthly numbers, maybe the BLS stops publishing those, or Republicans in Congress, although they have significant worries about the nominee for next Fed chair, feel they need to be loyal to the president and pass whoever he nominates. The market at some point could really fall out of bed on the back of that.
So E.J. Antony, the nominee, clearly a partisan loyalist, right? But I mean, putting that aside, there are, I think, legitimate worries, and you weigh in on this because, you do research, right? And you depend on data, including from the government, right? There are legitimate concerns about the BLS having been underfunded for several years now, right? And these concerns are from both sides of the aisle, right? With Republicans as well as the Democrats. And they have been scaling back their sampling as well. It raises the point. I mean, even before you talk about political loyalty, et cetera, the methodology, the process of getting to these numbers is in question.
Agreed. And I've often argued that the monthly payroll data is probably the worst piece of data that people pay attention to. But that's not because it's been politically manipulated. It's partly, as you say, because the BLS has been underfunded. But it's also a really hard thing to do. They send out a survey to companies to say, how many people did you employ last month? And most of the companies take a month or two to respond, if they respond at all. So the numbers are really, really hard. CPI is the same thing. If you go into detail on how you collect CPI data, it's still, basically some middle-aged ladies going around supermarkets with a clipboard ticking off prices. It's no more sophisticated than that. So a couple of points I would make. One is we have to be very humble about data. We all get fixated, and you did it earlier, I do it too, on core CPI month on month was 0.32. Come on, you can't really believe it down to 2 decimal points. But secondly, the point is actually the US data is undoubtedly the best in the world in terms of breadth, in terms of depth, in terms of the statistical robustness of it. I mean, of course, Chinese data is ridiculous, but even frankly, the European data is nothing like as good as the US data. So we all have to rely on
Okay.
this data. It is what it is, but be humble when you look at data.
Okay, and are you also hedging, Garry? And I guess the direct question I'm trying to ask is, are you looking at other sorts of places to mine data? ISM, Michigan Conference Board, you could go on and on, the Fed's own beige book, right? As well as private data, because that's where it gets really interesting. You know, these days you've got things that can measure things like consumer foot traffic, prices, job openings, all online.
Yeah, so you have to look at everything, and you're absolutely right. There's a lot of new data series in the last few years. If you take the jobs number, for example, the ADP, the payrolls processing company, produces data a couple of days before the payrolls number is announced. And they often, almost always, in fact, move in the opposite direction. But it could well be actually the ADP data is better. It's real numbers. It's companies who are actually putting their payroll processing through this company. And as you say, that there are now things like point of sales numbers. There are prices you can collect on the internet. So the answer, as an economist or an investor, you have to look at all of this. We have a lot of models at BCA where we put this all together. You weight it depending on how reliable it's been in the past, but you can't just rely on one data source. And particularly now, it's the same with opinion polls. It's very hard to get people to respond to surveys, to answer the telephone, to answer internet surveys, etc. So, yeah, unfortunately, data is deteriorating everywhere around the world.